I really believe and I truly feel in my heart that every single person out there that wants to get into real estate is underutilizing their current network. And what I mean by that is you've built relationships throughout your life. You see people that are successful, doing great things. And why aren't you reaching out to them? Second thing here is people do not do enough due diligence. They hear the shiny influencer, they hear a podcast, they don't call up their buddy Joe, and they just go buy a property and they learn the hard way. There you go. There's your education. You just paid for it.
Everybody's got a different way of learning too. It's just how they consume information and how they can learn. So what are some good books that you've read lately?
So lately I'm on.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today, we're joined with RJ De Leon. RJ has a master's in accounting science with over 15 years in the corporate realm. RJ is more than just an expert. He is a passionate mentor dedicated to nurturing growth and fostering lifelong happiness in business and beyond. RJ, we're excited to have you on the show today. If you could, let everyone know a little bit more about yourself.
Hey Josh, thanks for having me. Really excited to be here. I'm a little sick, so my voice might not come through correct, but for all the guests, excited to be here. Like Josh said, have a master's degree in accounting, really worked in corporate in both public and private accounting, moved to B2B sales for Fortune 1000 all the way down to Fortune 100 companies. Have quite a bit of experience selling to C-suite and executive levels of corporate. So even though I've only been in real estate 6 years, I say I've been training for this all my life. So even before college.
That's awesome. It sounds like you've just found yourself in alignment with real estate. You've been searching for it and you finally found it.
That's correct.
And accounting is extremely important, and it gives you kind of an unfair advantage, which is great for you in real estate as far as underwriting, understanding rent rolls, understanding T12s, understanding leases. Tell us a little bit about how that's helped you with your journey in real estate.
Sure, it's helped significantly. Even if, well, my accounting experience was actually in client accounting services, doing financial statements for Class A assets. So I actually worked for Jones Lang LaSalle. They're the second in the world for commercial real estate services. Also, Golub & Company. Golub & Company is a small family office. Started in the 50s with duplexes. Now they own 10 billion in assets across multiple countries. They're very widely renowned for their property management capabilities and their accounting capabilities as well. So that's one of those things that I wish I would have taken those jobs a little bit more seriously. I know accounting didn't align with me and my personality. So I did everything that I could to get by. I went above and beyond, every now and then. A typical worker and do the least I can. It has been invaluable. Being able to see a balance sheet, trial balance, general ledger, being able to see the cash flow statement, it has been valuable, extremely valuable. I know my way around those financial statements. However, in partnerships, you want to do what you're good at, what your passions are. So even though I have that experience, that is not my realm in the partnerships that I'm in today.
Yeah, no, absolutely. And it kind of gives you the advantage to see the numbers and see behind the scenes of what some of these other corporate conglomerates are doing and how they underwrite deals and how they purchase deals. I mean, you're right in the thick of it. So it gives you just a behind the curtain look at everything as a whole. So how many units do we own right now?
the first deal that we got into was in 2017, and all it was a triplex. My wife and I were thinking about she wasn't my wife then. We had only been dating about 4 months when we realized that, hey, we want to do something better with our lives. She said, what do you think about this relationship? I said, I like it. Let's take it how it goes. And she said, nope, we need something better. We need a plan. If you see a future in our relationship, what do you want to do? Because I don't want to work for somebody the rest of my life. So I looked at her. I said, oh, well, I like real estate. And she said, good, me too. Here's books, here's articles, here's podcasts. So we got to work and we bought our first triplex 8 months into our relationship. We're only dating. New friendship, new relationship, new business venture, new jobs. Even I met her at a job, so it was a little crazy. So we bought in the neighborhood of Bronzeville. I'm not sure. Are you from Chicago area?
No, I'm just outside of Northern Kentucky, Cincinnati.
Okay, got it. Well, there's this nice little neighborhood called Bronzeville that was traditionally in a not very friendly neighborhood, but it was experiencing this squeeze between University of Chicago, Hyde Park, and South Loop, Chicago. So it's this little strip right in there, just east of the highway. A lot of people were saying that's too risky. You don't know what you're doing. You guys are just a target. You're a mark. We ended up buying a house that people didn't think would come back to life. We bought it for 211 with FHA financing. Put very little down, and I went to work. Spent 7 months rehabbing our unit. We kicked out the worst tenant. Spent 7 months rehabbing the unit. Cleaned up one of them, got that leased up right away, kept one legacy tenant, and immediately off the bat, the mortgage was being paid for by our tenants. So that really allowed us to scale significantly because we took a risk. And yes, because we're green, we got into a project that we didn't think would be as much headache as it was, but it turned out to be a significant win. We put about 70,000 into it and refied at 465. So if you're
Nice.
thinking about those numbers, 211, 70K, we're in 281, refied 465. We took out, over six figures in a cash out refi back when rates were still 3%.
Wow, that's incredible. And that was your first deal, kind of propel you to the next deal, correct?
Yeah, we bought a commercial property less than a year later, 6 unit in Washington Park. And again, a lot of people told us not to buy it. It's not the right neighborhood, XYZ. Our cost basis is about 430, and that property is valued at about 700 plus right now. And
Wow.
we got an extremely great commercial rate, unheard of at the time. We called about 33 different banks to find it, and we finally settled on one, and we're in business. So that cash flow is about gross about 90K a year, and
Awesome.
and our cost basis is super low, so it's just cash flowing.
That's that's the power of real estate too. Start with one leads to two, and then
Yep,
before you know, you've got more. So, do you all do property
exactly.
management in house, or you have a third party handling it?
Sure, we do property management in-house for our individual portfolio or personally owned portfolio. It's relatively easy, only because somewhere in between those two properties, I created a construction company. It's called EJC Partners. We're multifamily focused, investor friendly contractors. So that happened because I was always a social media forward personality. And people started reaching out to me and saying, "Hey, can you help me out?" And I had the opportunity. I had some guys that wanted work, and I talked to the guys, said, "You want to start a company?" And they said, "Sure." Said, "I don't know what's going to happen, but I'll keep you busy as long as I can." And now that company's been running over 4 years.
Nice. Very cool. I'm
Yep.
assuming you have project managers in front of you and the back end staff and
Sure.
handling the workload and all that good stuff.
Well, that scaling actually just started to take place. I was the glorified hustler. I was in charge of everything. And looking back now, it's a significant learning experience because that experience with EJC partners has allowed me to grow and see what I did incorrect. Scaling now, I'm in Connecticut. I haven't been back in Chicago for about 7 months, but yes, now I have project managers. I have number two operations guys, site guys, and they run day-to-day operations for me. And they've actually pushed me and allowed me to go do your CEO stuff. Go figure
Yeah.
out how to grow the company. Stop dealing with this.
Yeah. That's essential to have staff that keeps you out of the weeds. That way you can grow the company, keep your vision on the future. That way that keeps them busy all the way down the line, and it enables them to grow too. If you've got staff
Absolutely.
that constantly keeps pulling you back into the weeds, then just distracts the company as a whole, headed on both ends. But you've got key players in front
Absolutely.
of you. It's huge. That's So tell us about your biggest deal you've done so far.
So the biggest deal that we've done so far actually is not in real estate. It's in the cannabis world.
Okay.
Um, so I'm actually repping some of our brand right here. This is Vertical Dispensaries. This is our dispensary arm for a cultivation facility that I'm part of. We're vertically integrated. I'm involved in operations for a multi-state cannabis operations that is valued approximately at $120 million.
Wow.
So it's
Um,
go
That's
ahead.
incredible. Me and the
Yeah.
wife were driving through Destin. I think this was probably a few months ago, and there was a dispensary with a drive-through, and the drive. I mean, there was cars wrapped around the entire building. Is that what we're talking about here? Dispensaries with drive-throughs?
So no, not dispensaries with drive-throughs, but items like that is very specific market to market. Um, it's a heavily nuanced industry. A lot of people only know what they know through negative news, and we know the news never portrays things in a positive light. And working with a lot of the investors, you hear things that sort of make you angry. Like in real estate, if we hear, "Oh, I'm waiting for the market to come down. My aunt tells me the market's going to crash. I'll buy next year." So if you think about everybody that was saying that since 2017 and where we're at now, it's one of those "I told you so." Why don't you listen and educate yourself rather than take take somebody's blind word at it when they don't even know what they're talking about either. So
I mean, to me, it looked like business was booming. Regulations are high for the people that are getting into it when the
sure.
state starts to regulate it. But man, it's becomes legalized, and I could see where it could be $120 million valuation for sure.
Yeah.
That's huge. So what is your forecast on real estate? Where do you want to take that business to?
So currently I'm building a development company, me and my wife. My wife is involved in everything I do, from passive investing to active. The only thing that she's not really involved in is a construction company. But when it comes to any of our syndications, anything, the development team, that's she's involved, and that's where we're going, real estate specific. I'm starting to pivot a little bit into maximizing on the nascent industry of cannabis. I will always be a real estate operator, but you got to think about the long runway and the difficulties that real estate investors are seeing today in the current market. That's why I'm pivoting over to development. We have a significant gap of assets. We've been at a lack of inventory for a significant amount of time. First time home buyers are the millennials have just overtaken baby boomers, and the largest population in the United States are coming to age first time home buyers. So all the other micro nuances, macro markets, all that we'll figure out. It's not really to be discussed here on this podcast because we'll never be able to cover all the nuances of that either. But development's where I'm going, and hopefully, not hopefully, by the end of the year, we will have broken ground on a few new single family homes, 1,700 square feet, under $500,000, to fill that gap for the first time home buyers that can't afford these 3/4, $1 million homes that are on the market.
Yeah, I think there's definitely disparity between affordable and realistic for sure.
Yep.
And it's just, and now you've got rising rates, and usually after rising rates, we see a pullback. No, Invitation Homes, they just completed a $650 million purchase of single family homes, and their average purchase price on that acquisition was $388,000 per house. So I mean, to make a purchase that substantial, they see things on the horizon where no matter what, real estate is it's resilient. It's going to make it through any economic environment. It's just playing in the right markets, right sandbox, being there at the right time too. And I would assume that they bought them at a discount with the way the market is currently today, which that's what we're all after.
Yeah. And unfortunately, that business model is highly transactional. We're involved in real estate for the residual income, for the passive income that is absolutely not passive, but we're in it for the cash flows. When you're in development, unless you're keeping them for rentals or B&Bs, it's a highly transactional play, and we're okay with that.
Yeah, definitely. The operator side, we're managing, we're putting on the show. I mean, everything looks good on the other side, but there's a lot to manage on the operations, making sure rents are collected, making sure renovations are being done on time, evictions, just routine inspections, just on and on and on.
Everything. List goes on.
Yeah, and just with any business, there's always there's always the how do I say it? it all has its nuances. It all has its things to deal with. It's it just depends on how deep in the gutter you want to go with each business. But even your cannabis business, it's going to have things that you have to deal with that are just operational constraints.
Yep, absolutely.
But I think it's just
things. As real estate investors, what do? We understand as much as we can, and we just mitigate the risk. And then we understand our own tolerance, and whether or not a deal fits for us, we move forward or we pull back. I mean, if you operate in another industry, it's no different. Do your homework up front. Make sure you understand all the nuances that you can, do your due diligence, and then make the proper assessment. That's it.
Yeah, for sure. So if say a beginner is wanting to get into real estate, they're wanting to connect the dots, figure out what the best path is to learn the language, how would you recommend that they start educating themselves?
Well, first and foremost, I really believe, and I truly feel in my heart, that every single person out there that wants to get into real estate is underutilizing their current network. And what I mean by that is you've built relationships throughout your life. You see people that are successful, doing great things. And why aren't you reaching out to them? If you want to be a real estate professional and you see your friend Joe over there has flipped 20 houses this year, why would you go pay for a mentor to learn the same thing when you could just call Joe up and say, hey, Joe, trying to get into it, how can I learn? Second thing here is people do not do enough due diligence. They hear the shiny influencer, they hear a podcast, they got some cash sitting in the bank, and they're like, this is easy. They don't call up their buddy Joe, and they just go buy a property and they learn the hard way. There you go. There's your education. You just paid for it because you lost on that real estate. And typically those same people are the people that if you ask them about real estate, they'll be like, don't ever do it. I did it once and I lost. Well, you didn't do it correctly. So I truly believe in my heart, the number one thing that people do not do is leverage the current networks. Everything else, podcasts, etc., yeah, you could find it. There's a plethora of free resources out there. I host the group. It's all free resources, no sales pitch. And I have friends that got into real estate. I told them to join my group, and they said, what are you trying to sell me? Now they're on a duplex that they've owned for 6 years and haven't grown their skill, and I still don't think they're part of my group. It's really weird. It's really weird. I think it's an ego thing. And this point in my career, I have no problem saying, hey, you're doing it wrong. Don't come to me and justify why you did something when you want to learn from me. Don't talk to me about what you're doing. You're here to listen. I have no problem doing that nowadays.
Everybody's got a different way of learning too. It's just how they consume information and how they can learn. So what are some good books that you've read lately?
So lately I'm on Traction again for the third time.
Good book.
Traction is one. My favorite book actually that got me to change my mindset was Mindset by Carol Dweck. And the most entertaining book I ever read, shout out to John Clem of Quality Builders, sent me Shoe Dog, and that's Phil Knight's memoir. And that was amazing. That was a lot of fun to read.
Cool. Absolutely. And that's what it takes is a mind shift, books with mind shift, and then you can gain some insights and some knowledge that might change the trajectory of decision making just by picking up the right book, for sure. Very cool. If a listener wants to reach out, learn more about you, and just figure out what's going on, possibly get advice, how can they get a hold of you?
So I actually have a podcast myself. It's Mindset Matters with RJ DeLeon. We're on Spotify, Apple Podcasts, Google. We're pretty much everywhere that you could get a podcast. I am very heavily focused on Facebook, but I am currently building out my Instagram profile. So it's R.J. DeLeon, DeLeon. That's Facebook and Instagram. So just RJ DeLeon.
Awesome.
Yep.
Very cool. Well, I definitely look forward to following you and seeing how far you take your businesses, and certainly appreciate you coming on today. And we will certainly talk soon.
Yeah. Enjoy Marcos Islands. It looks beautiful out there.
It is, man. RJ, I appreciate your time. We'll talk soon. Thank you.
Yep. See you.
All right.
Bye.
Bye.